Good morning and welcome to this weekly market update. So it's the 3rd of April. What I'm going to be doing today for any new followers is going through the euro dollar, cable, dollar yen, dollar Swiss and gold charts, trying to give some sort of weekly or even monthly perspective, some sort of outlook to help your trading for this week. For anyone who's new to these charts, basically there's 3 moving averages on each chart. The red one is 55 simple, the purple is a 200, the purple is 100 simple, sorry, and the gold is 200 simple moving average. Okay, so let's have a look at euro dollar on the weekly. What do we see here? In terms of bigger sort of fib trade, nothing too exciting. I mean, it didn't quite come down and test to 78.6, but not a lot of interest in that type of fib setup. More interest in this shorter swing one here. If we switch it to the daily, I'll draw it from the daily, then go back to the weekly. You can see it much clearer here. We've spoken about this for the last sort of few weeks, and especially. So I'm just going to get rid of this 38.2. I don't know why it's up there. I don't use that. So as you can see on this weekly, we had this lovely weekly hammer, which happened so 3 weeks ago now, and this was a great reversal right off this 50% fib and also its previous support around this area here. We've had a nice rotation to the upside. In terms of last week's weekly candle, which is that one there, is pretty much a continuation pattern. It does have a bit of upper wick, but the lower wick is slightly longer, so you'd say that bulls are still in control. In terms of weekly resistance levels, what do we have? The main one would be this 0% line, which is at one spot 31.85, and that 100 week moving average around here, which is at 1.3517. But in terms of weekly perspective, you have to say it's still towards the upside. We may get this candle, maybe a little retracement candle, like it's already kind of forming. But you can see that lower wick is still there, even on this week's candle in 2 days. We've had sellers kind of try and press it down, but buyers have pushed it back up. Let's flip to the daily chart now, see if we can get a better sort of perspective. Let's say we do get some sort of retracement. The levels you want to have a look at on the daily chart will be the 55-day moving average, which is at around 1.3184, and the 0% is the same, but we do also have the 200-day moving average, which may coincide with that 100-week moving average, and that is at 1.3586. I mean, if you want to zoom in a little bit more on the daily, it does look a bit toppy currently at around this level. We have a nice sort of resistance level there around the 1.3359, I say 1.3360. That's the level that it needs to get above in order for that high at 1.3485 to get taken out. And currently it's struggling, so it looks like we may get some sort of retrace. If we do get a retrace, I've already spoken about those moving averages down there on the daily, but if we draw a little Fibonacci retracement from the low there, if it comes down, surprise surprise, the 55-day coincides with that 50% level at the 1.3194, so that would be a key level to look out for on your euro dollar daily chart for this week. But in terms of weekly, it looks like it wants to go up, but we may get some sort of retracement. So if we do get a retracement, which is looking likely because this resistance zone here, then that will be the level to look out for, that 1.3194. It's a good level to look at on the charts there. Okay, let's flip to cable now. In terms of cable, very interesting chart, especially the weekly as well. We're getting some key levels now. We have this lovely trendline support here, and in terms of last week's weekly candle, very bullish, even more bullish than euro dollar, I'd say. Looks like it. Well, the thing is now is that on Sunday night we had some gap ups. On Sunday night, you can see it easy if you zoom to the 30-minute chart. Let's say you can see a little gap up around here. I'll just highlight that for you. so you can see. Which, the reason I'm saying about this gap up here is that this meant that the weekly candle on cable opened above that 200-week moving average, which is a key sign that we made. It's a technical breakout there if it's opened above that. I mean, cable's already filled the gap, but in terms of the weekly perspective, an open or close above this 200-week moving average is very, very bullish indeed. So we may see a nice little breakout and it might squeeze further to the upside. But you can see it's a bit sticky around this kind of 55-week moving average and 200-week moving average as well. There's a very nice resistance zone here in terms of a longer term perspective at around this 1.6750 area. That is the line in the sand really in terms of the weekly chart. And it looks like it wants to grind up. We've had a nice sort of bounce off of this trend line. And in terms of the daily, how far away? I mean, we're still quite a way away from that big level. But if you look at the recent fib from lows to highs here, with this lovely bounce smack bang off this 50% level at 1.5606, and you can see we're just rotating to the upside. We've now broken above the 0%, the key resistance, and all above the moving averages now. So the next sort of resistance zones in terms of a shorter time frame, the daily chart will be the 123.6% extension at 1.6173, which funny enough coincides with these previous highs as well. A nice little confluence area around here. Pretty much a very similar level, and if we smash through that, then it will be that 150 level, and then these highs over here. But in terms of daily, if we're getting any sort of retracement, then a lot of people, I mean, you'd have to say it's going to be looking for a test off this previous resistance, which will now most likely be turned into support at 1.5991. But yeah, it's a key chart on cable. You have to say it's still very, very bullish. And I mean, in terms of the weekly and the daily, it's very, very bullish in all these time frames. I mean, in terms of this week, you'd expect some sort of retracement, even if it's just a couple of days. But it'd be very likely that buyers will be coming in at this 0% level. Does it coincide with the shorter time frame fib? Let's zoom in on the half an hour. Does it come in around here? Not really. Maybe if we draw 38.2 it might though. Just below it, but no, that's not really. Let's delete that fib. Now the key line in the sand this week is, for me, would be that 1.5991. If we get some sort of sell-off, that'll be the key level that people will be looking at for a little dip buying opportunity. But it's still a nice uptrend, especially on the 4 hour as well. But the daily and weekly look very, very bullish indeed on cable. Okay, let's have a look at dollar yen now. In terms of the weekly, we've spoken about it the last few weeks now. Very, very bullish chart. If we saw any sellers come into the market, then we said on the weekly that this 100-week moving average will be the key selling zone of interest, and that has been working very nicely these last few weeks. And in fact, this week we've already come down, tested it around the 81.75 area, and we've already started to bounce up a little bit. But it looks like it's getting a little bit heavy now. But in terms of that weekly line, it's still holding very, very nicely. That's the only real sort of interest I have on that weekly chart, unless we get a much bigger sell-off. Let's say we break that level, then the first level of interest will be the 80.09. That's a long way away yet, so that's why I'm going to delete that fib, because it's not much interest unless we get 400 pips sell-off this week. Then it may come in handy. But let's look at the shorter time frames really. On the daily, we've broken all of the moving averages. In terms of 4 hour, let's look at some kind of better levels really. On the 4 hour, what do we have? This recent little dip here. We had a nice bounce off of this 61.8 a couple of times. Happened once there, and then we had it bounce over here. But now we've posted below it. We closed below it. We also had a nice bounce to this 200 bar moving average on the 4 hour. It's starting to pop back up. So in terms of the daily, how is that level looking? The daily is still holding very nicely. That's interesting. That you can see multiple times. I'll just make this thinner for you. Multiple times this level has been holding extremely nicely. This 81.95, pretty much 82 level. You can see all those candlestick wicks trying to pierce it lower, but we always bounce above. So today's daily close will be very, very interesting for dollar yen. See if we get a close above that 81. If we do get a close, then you have to say the odds are for further upside towards that 84 level. Okay, let's have a look at dollar Swiss and what do we have on this chart here. Let's look at the weekly. It's in terms of the weekly, what do we have? It's still in between this 100-week moving average and 55-week moving average. In terms of the fib level, if we draw it from the low to the high, I think we're still miles away from the 50%. Yeah, we are indeed. So not very interesting there. In terms of last 3 weeks candles, they've been quite bearish. We've started to sell off a bit here. We're starting to build some upper wicks here as well. So it's trying its hardest to kind of bounce up, but it's failing miserably, especially for the last 3 weeks. Let's have a look at the daily. What do we have on the daily? In terms of fib levels here, let's draw from the recent low to the high, and it looks like it wants to come down and test this 61.8 area. In terms of moving averages, we've broken below this 55 and 100 last week. We've continued to hold below that. Sorry. The 200-day moving averages are around 0.8850, so that'll be a key level if we get any further sell-off, but not a massively interesting chart. I mean, if we look on the 4-hour, we have this downtrend, this downtrend line resistance, which is still holding. And it looks like it's coming to break up a bit. It's a nice level here on the 4-hour chart, very nice level indeed, at pretty much the 0.90 handle, which has been holding very, very nicely. What does that look like on the daily? Yeah, good level that, especially on that 4-hour chart. You can see all these multiple wicks around here, around the low here. You've got a few here. What have I done there? Let's highlight that up for you again. Oh, Jesus. So my computer's playing games with me. You can see all these wicks around this level here. The amount of times we've pierced the 0.90 handle, and it's come above and closed the 4-hour close above. So key level. I mean, this will be the line in the sand for me in terms of this week. And if we do, it's starting to pop up very nicely now. And look, and the current candle is a 4-hour hammer. So if this candle closes and we get a break of this trend on them, we could see a nice pop up. And if it does pop up, then the first level of resistance I'll be looking at is this 55 bar moving average on the 4-hour chart, and that comes in at 90.64. Okay, but very, very interesting week actually we've done it. I mean, on the longer time frames, the weekly and the daily, it looks bearish. But in terms of a shorter move, and maybe just for this week, some sort of little few-day perspective, it looks like it wants to come and pop up here. This level's been holding very, very nicely. It's a very interesting week on dollar Swiss. Let's have a look at everyone's favourite commodity, gold. On the weekly, you can see this amount of times we've spoken about it since 2008. This trendline support has been holding fantastically, and also it coincides with that 55-week moving average. Last week's candle wasn't exactly that convincing to the upside. In fact, the upper wick is slightly longer than the lower wick, so you can see not a huge amount of buyers coming in. But in terms of the fibs, this 50% level is what it's all about on gold. There's 1656. We've seen the last 3 weeks now it pierced below this level and post a nice weekly close above. So you have to say the odds are still towards the upside. You'd be very, very brave to be selling gold at these levels with this trendline support, 55-week moving average and 50% all holding. But we'd like to see a bit more of a more aggressive move to the upside, especially this week. This week's candle will be very interesting, but you have to say the odds are still towards the upside, and this 1790s is surely just a couple of weeks away from getting tested. Okay, that's all for the charts. Let's have a look at the Forex calendar for this week. What do we have? What day are we today? Tuesday. So in terms of today, we've already had some nice bullish construction PMI numbers out of the UK. which followed on from yesterday's bullish manufacturing PMI numbers. They came in better than the forecast at 52.1. The forecast was 50.6. Today we had the construction PMI. It came in at 56.7, which is a big increase from the 53.6 level. In terms of on Wednesday, what do we have? We have some Aussie trade balance numbers for any of you who trade the Aussie dollar. Halifax, UK Halifax HPI, housing data forecast at minus 0.3%. Previous was minus 0.5%. We also have UK services PMI out at 9:30 tomorrow, 50 forecast of 53.5. And at 12:45 tomorrow we have the Eurozone minimum bid rate, so that's still forecast to stay the same at 1%. And at 1:15 we have some big US data. ADP non-farm employment change forecast at 209,000, previous was 216,000. And back to the Eurozone, we have the ECB press conference. So will Draghi be hawkish or will he be dovish? Very, very interesting that will be. And at 3 PM we have some further very important US data, the ISM non-manufacturing PMI data forecast at 56.8. Previous month was 57.3, so a little downbeat forecast there. And on Thursday, 9:30, we have some more UK data, manufacturing production month on month forecast at 0.2%, previously was 0.1%. And more UK data at 12 o'clock. We have their interest rate decision as well, forecast to stay the same at 0.5%, low interest rates there, and which follows MPC rate statement. 1:30 we have the weekly jobless claims forecast at 355,000, previous was 359,000. There's quite a bit of Canadian data there for any of you that trade dollar CAD. If you want me to have a look at the charts on that, then feel free to comment below the YouTube video or on Twitter either. If you want to see that chart, we can go through that more in the next few weeks if you want. But the key bit of data is on Friday. US non-farm employment change forecast at 211,000, previously 227,000. And what follows that is the unemployment rate, forecast to stay the same at 8.3%. Okay, hope you enjoyed that video. Stay safe. We do also have some bank holidays out on Friday, especially in the UK as well, and German bank holiday as well. So liquidity may dry up, but non-farm day is always quite lively, so I wouldn't be surprised if it was very, very volatile that day. Okay, so I hope you enjoyed today. I'll catch you next Monday. Have a great week trading. Thanks.